Hello auditories. So I will be today discussing the revenue topic with you when a revenue comes up with a little twist with IFRS 15. You will be familiar with that. So it's a very short video where I will just pick up only two things where revenue can be a little bit tricky. So can you tell me what is the difference between unearned income and unbilled income? You have heard about this many times, and even you will see this thing in your questions where it shows deferred revenue. Oh yeah, we heard that. So there was a question. It is in exam kit also, where a revenue is recorded in advance. How will you treat it an advance revenue? What advance revenue is? Think about it. As per accrual concept, a revenue is recorded when it is earned, right? And definitely you will have seen the IFRS 15, right, where we record the revenue when the performance obligation has been fulfilled by us. Only then we can record the revenue, right? So when we talk about unearned income, or we sometimes say it as a deferred revenue, we treat it as liability. Have you ever thought of why this is treated as liability? Because when we say a deferred income, doesn't mean we have delayed it, that is because it's a liability. No, it's not like that. But a deferred income is when we have earned the income but the performance obligation is still pending from our side. Are you getting me? We have earned the income, that the customer has paid me the income, I have received it, but the performance obligation from my side is still pending. It can be a delivery of good, or it can be a manufacturing thing, or etc, depending upon what business in I am. So because of this, it is not satisfying the 5-step model of the IFRS 15 revenue recognition. I cannot record it as my revenue. That is why this thing comes in the balance sheet in the liability side as deferred income or unearned income. Second one is the unbilled revenue. Now, what is unbilled revenue? This term is something we don't usually use it, but you will get this kind of things when, for example, see here, it's a DMart case. It's a news about the latest one that the DMart revenue has been increased, right? And we are aware of this thing that DMart Ready is a e-commerce website where you can order your groceries online. So in an online business, how would you record the revenue? Is it in advance when the customer is already paid, or it's upon the after the delivery? When? Because in online business we get prepaid also, we get the postpaid also. So like I have explained the deferred revenue, you can understand that unearned income will only come the customer has paid in advance. That is, I had prepaid it, but the delivery of goods is still pending, so that DMart cannot record it. Second is the unbilled, okay, unbilled revenue. In this case, I have performed the my performance obligation, but the income to be earned is still pending. So we treat it as an asset. Why? Because here the obligation from my side has already fulfilled. I have already provided the goods, or I have already provided the services, but the income from the customer to be received to me is still pending. I can relate this to online business, like we said in DMart. Suppose you get this kind of case study that the revenue has been increasing, right? Maybe that company has recorded it in advance without the performance obligation, or maybe has increased the asset side by recording it as unbilled income. because there can be cases like, although it's a very rare one that we get the goods and the amount is still pending, but to my knowledge, when we pay cash on delivery, obviously that amount doesn't immediately goes into their system. They will go to first the delivery boy, then it will transfer into their payment system, and then to the main system. Obviously it's a quick system to the trail, but it's not an instant one that I just paid and get into the system, because you may have seen this in a case of when you return the goods, you don't immediately receive the return. It takes time. Your goods will be gone to back to the supplier, and then by the time it takes a long 3-4 days process to get back that money. Also, you can get this case one also, that when you have to return the things, so there can be a glitch in the recording that they might have not treated it back or reversed it. So these are the tricky points where you have to practice professional skepticism, that your Sherlock Holmes eyes, or if not, then you can use your lenses of Sherlock Holmes to see. Take care, all the best. I hope you like this video and found this useful. Bye.